Hi, very good morning to one and all. So, thank you so much for joining us today. So, we are here for you for the UAE Corporate Tax webinar. So, myself, Madhu, I'm one of the senior product experts from the Zoho Books team. So, we also have Mr. Guru, who heads the accountants for the Zoho Finance Suite. So, welcome, Guru. Thank you so much for doing this. Yeah, over to you.
Good morning and thank you for everyone to join this session. We hope to make it as useful as for you in this session. Madhu, can we have the presentation, please?
Yes, I have shared. Thank you.
So in today's session, we will look at how we can simplify the corporate tax. As you know, any tax laws are difficult to comprehend. Sometimes knowingly or unknowingly, we might make some mistakes or errors in computing tax. So this particular session is aimed in simplifying the UAE corporate tax, of course, with Zoho Books. Please note that whatever suggestions, ideas we are sharing is purely from our perspective. Each business case might require some expertise. You might contact tax agents, authorized tax agents, and take the specific clarity. Here we are to cover the basics and very important points, especially from an SME perspective. I think with that background, we can move to the next slide, Madhu. Of course, Zoho Books, as all of you might know, that it is an FTA accredited VAT compliant accounting platform. When VAT was introduced in 2018, we were one of the first softwares in the market to support this tax compliance. It handles the end-to-end financial accounting for any business, basically, be it service, trading, or entry-level manufacturing. We support everything. It allows you to manage the bank transactions, expenses, inventory, and all the reports are available. So this is what we call in Zoho Books. I will let Madhu to speak about Zoho Books towards later part of the presentation. Rather, we will now move into the corporate tax part. Yeah, today's agenda, we will not see the corporate tax is such a vast topic. Within 20 or 30 minutes, it is impossible to cover everything. So what we have done is we have taken select sections which are directly impacting a large section of SME audience. So only those part we have taken it. And corporate tax in Zoho Books with a live demo is the main point of today's presentation. So that will be taken care by my colleague Madhu here. So moving on, in terms of corporate tax and its scope, I think all of you are aware that, next slide, all of you are aware that corporate tax was launched effective from 1st June to 2023. And we had, from the financial year of your organization, you had 9 months to submit the returns after the tax period. And we all know the limits. Up to 375,000 profit if you make, there is no tax, and beyond that, whatever money you make, it's 9% tax. And if you are a qualifying free zone person and your income is derived from the qualifying income, there is 0% corporate tax applicability. And if you have paid any tax on a different territory in which UAE is signed a DTC, a double taxation treaty agreement, DTA, then you can claim the credit of that. Again, these are all basic stuff which you would have attended in multiple sessions earlier, we would have covered. What I would cover here, back please. What I wanted to cover more here is about the importance and requirement of accounting as an aspect. See, all of us in UAE have been mainly doing accounting purely from for a management accounting. And with the introduction of VAT, we started accounting for indirect taxes. But with the introduction of corporate tax, as accountants or as a business owners, you need to look at the books of accounts from a corporate tax or a direct tax perspective. So certain basic things you need to include here. One is how you are going to determine the amount and timing of revenue and expenditure. So as and when it occurs, you have to recognize the revenue and you need to report it in the accounting period. A simple example is when you raise an invoice or a bill, when the service or when the delivery is done, in that period, you need to account it. if you are following accrual basis of accounting. If you are following cash basis of accounting, you can account it when you are realizing the cash or check, whenever you are receiving money from your customer. So the corporate tax, if in UAE, there is a threshold of 3 million AED threshold if you want to follow a cash basis. If you are below that, you can opt for a cash basis accounting, but most of the businesses follow accrual basis of accounting. So you need to understand clearly what is the determination of amount and timing revenue of your expenditure. Another key thing you need to look at it is fair value accounting. What is the fair value accounting? Again, this is a new concept. If you are going to raise an invoice or any service, render your service, you should be at a market price, especially if you are going to raise it to some parties which are related to you. Say maybe a sister concern of you are offering some services, or you are offering some material to them, then it needs to be billed or invoiced at a fair value market price. This you need to understand much clearly so that you avoid some potential challenges in the future. And last and most important requirement is data and transactions aspects. You need to maintain books of accounts for a minimum period of 7 years from the completion of your accounting year. Basically, it's an 8-year accounting period. You must maintain books and records. Of course, Zoho Books offers maintaining books of accounts with the attachments, etc. So preferable that you digitally scan the copies of invoices received from your vendors or various other expenses, whatever you incurred. It is better to digitize this and attach it with the transactions, because 7 years is a long period. Sometimes the people change here in accounting profession. So if you are a business manager or a owner, it's a good practice to instruct your accounting staff, whoever is doing the work, to attach the transactions. We never know when the FTA might ask for additional or supplementary details. In terms of accounting, there is a requirement of IFRS for SMEs is required to be applied, or IFRS. And also for you need to maintain certain record keeping obligations, be it a cash book for recording daily sales and credit sales, and a salary and wages register. If your business has employees, it is by law that is expected that you should maintain a salaries and wage register and any related records. Because if you are paying salary through WPS, then you need to maintain the records, or any other records that you feel that it should allow the taxable income to be computed. So you need to maintain the record preservance. That is very important in corporate tax. Why I am highlighting this is many of the businesses might be looking at purely from a software perspective, but definitely record keeping is a very important aspect. Moving on, next slide, Madhu. So another key topic that is in the discussion in the accounting fraternity is the free zones concept. Because many of the free zones, when the businesses set up, they were given some tax holidays or things like that. Of course, UAE government, we are thankful to the government and the FTA authority. They have honored the word, but of course there are some conditions or basic requirements that are there. What are all those things? Can we look at the next slide? So if you are in a free zone person, you should have the qualifying income. So how do you treat a qualifying income is a very important activity you need to understand. The criteria is you have income or transactions with other free zone persons, and government has published a list of qualifying activities and as well as excluding activities. For example, if you are going to process your goods or materials, or you are going to treasury or financing services to related parties, there is almost 12-13 activities the government has published. One major activity is, which we are all mostly doing in UAE, if you are a free zone person, is distribution of goods or materials, maybe from a designated zone to a customer that resells such goods, or maybe they will alter or process it a bit and then they will again resell it. So this is also allowed or qualified activity. In case if you are going to do such activity and any other activity which is ancillary in nature, for example, for performing the task or activity, you are going to some activity, some performance you are going to do, then that also will be coming under this qualifying activity. One important requirement is de minimis requirement. De minimis requirements means if your main activity is saying like it is beyond 5%, for example, your total value qualifying free zone activity is does not exceed 5% of the total revenue or 5 million dirhams, then you need not worry about that. So you will be rest assured that you are coming under the qualifying income. So then you will fall under qualifying free zone person. This is a very important thing. If you are specifically incorporated under any free zone, then you need to be cognizant of. Moving on, next slide, please. So another key requirement is corporate tax registrations. I think all of us are aware that Imara tax portal is there for us to register, whether whatever may be the size of business, etc. The FTA expects that you need to register. Very recently, they have issued the registration timelines. If your license is issued in January or February of any year, actually it got issued on 1st March. So if your license was issued in January or February, any month, any year, then you have the deadline till May 31st, and so on and so forth. I don't want to waste time in spending reading all this. Very key important requirement is there is a fine of 10,000 dirhams in case if you are not registering by that time. Registration is a very simple process. You need to visit FTA portal, Imara tax portal, give your basic details submission, and the tax registration number will be issued. A common question comes into mind is, I am eligible for small business relief. My turnover or my revenue is less than 3 million. So should I register? Yes, you need to register. Even if you are SBR, you are going to be eligible for SBR. You must register for this. Please be aware of this. And I would urge all the businesses to comply to the law by registering first, because registration earlier it was not given a very clear timeline, but FTA with the recent notification, they kind of mandated it with the time frame. So please be aware of that. Moving on. So small business relief. This is also a very different topic. If you read the small business relief document, which was published in August 2023, what it says is, if you are a UAE resident, when I say UAE resident, I'm talking about the company. It has a place of establishment in UAE. And if your revenue does not exceed 3 million, then you are eligible, I would say, in a high level sense. So these two conditions are basic conditions. Next slide, please. So, and another condition is, if your revenue should not have exceeded for 3 years in the tax period. So, for example, first year your revenue is 3 million, and second year you went into 4 million. Third year you came back to 1 million. No, you have exceeded already once 3 million. So definitely you will not be eligible for. From second year onwards, you are not eligible for SBR. So what is important here is, if you are a multinational group or a qualifying free zone person, then you are not eligible. That you need to be aware of. Of course, there would be a simplified tax return and simplified record keeping, etc. Those kind of options will be there. Of course, small business relief will give you an option to not to pay the tax, but it doesn't allow you to be not registered or not filing the return. It's like filing a nil return. You can just, I'm giving for the ease of understanding, you can make it as a ease of activity. So, but you have to still follow the record keeping and tax return filing. Everything will be there, but it will be simplified. Another key requirement is, in terms of record keeping, you must maintain bank statements, sales ledgers, invoices, or other records. Maybe you might have a till rolls or delivery notes or any business correspondence. You must maintain all this for the same period as you are expected to be for any business. Another question that comes into mind is, if I have a business, I have my revenue of say 7 million AED. So can I create 3 business entities, make it 2.5, 2.5, and 1.5, and then can I manage it? If you make an artificial separation, FTA will not look it very kindly. So you need to still come under, not as a SBR, you will follow the standard aspect of tax filing. So please ensure that you are following the law clearly. And last point coming to small business relief is, if you are a natural person, for example, you are a small one individual doing business, and if your revenue exceeds 1 million AED, revenue, I'm again using all these words are revenue, not profit. If your revenue exceeds 1 million AED, then that person should also register for corporate tax. So this 1 million AED, if your income is from salary or investments like share or real estate, etc., you need not count that. If your business activity exceeds 1 million AED revenue and you are a natural person, you should also register for corporate tax. And of course, you will be eligible for SBR if other conditions are fulfilled. Moving on. Next. So I think I will take a pause here. Because the topic, as I was telling, it's very huge. It is very difficult to do justice in 15-20 minutes time. So in the interest of time, I will pause here and I will take some questions. Please note that my answers will be generic and it will not be related to your business scenario, etc. You might contact your tax agent to get a more clear answer. I think I will invite Madhu. How Zoho Books can help you in simplifying this. Madhu, I will request you to take over the stage from here.
Thank you. Thank you so much, Guru. Thanks for your valuable insights on the corporate tax and how Zoho Books is being ready for that and how we have implemented this for the welfare of our Zoho Books users and businesses in the UAE. Before I start the product demo on the corporate tax, so a lot of people have told that they were not able to see the PPT that is shared. So I would like to just clarify. So please note that this recording will be shared to all the participants. So you would be able to see it over there. Anyway, during the product demo, I will be sharing my screen. So you may please let me know if my screen is visible and we would be able to take it forward from there. Okay. So just to clarify, people who have asked whether you'd be getting the presentation, yes, the recording will be shared with you people and you may please have it accessed over there. Okay. Thank you so much. So thank you, Guru, once again. So I'll take it forward from here. Right. So yeah, as Mr. Guru was explaining you how UAE's corporate tax is very important for all the businesses and how Zoho Books is ready with that. So now in the next few minutes, we are going to see how Zoho Books is equipped with corporate tax and how it is being handled, how the corporate tax return is being generated, how you are going to mark it as file, and how you are going to record the payments, and so on and so forth. So firstly, as you all know, Zoho Books is a cloud-based accounting application, so which is VAT compliant and corporate tax ready for the businesses in the UAE. So it is basically a transaction-based application. So in order for us to stay relevant with the market, so we have introduced corporate tax, which is one of the important features in the UAE market. So how that can be managed in Zoho Books is what I'm going to show you now. So firstly, you need to head to the settings, and under that you will have the taxes and compliance section, under which you can enter here corporate tax details. So here we have both VAT as well as corporate tax section. So we are going to cover the corporate tax under the other taxes. So in case your business is liable to pay the corporate tax, you are supposed to enable this toggle. Once the toggle is enabled, the corresponding details have to be furnished. So the first is the tax registration number, as Guru had mentioned. So once you have registered for the corporate tax, you'll be getting a tax registration number. So that will be entered over here. And then the corporate tax return by default is 9%. So that is being populated here. So it is grayed out. So as you know, VAT is 5%, whereas the corporate tax is 9% here. And then here we'll have to provide the generate first corporate tax return report from. So that is the date from which you want this application to calculate your corporate tax must be entered over here. So these are all the basic details for configuring the corporate tax. And now comes the most important aspect of the presentation, which is the corporate tax accounts. So basically how Zoho Books has equipped itself in managing the corporate taxes. you are only going to just record the transactions, and the application is going to fetch those details under the corresponding sections based on the chart of accounts or the general ledgers that you're going to define here. Now, let me break down these information to you one by one on what you need to do. And as Guru mentioned, all the information that I'm providing is on a generic perspective. So it may vary from business to business, but the core idea of having the sections remains constant. Okay, so now firstly, you can see this is the corporate tax liability account. So like how you have the GCC VAT payable liability account for your VAT, similarly, the application is asking you to define another current liability type of account under which you want to capture all the liability at the end of the corporate tax period. So you have the provision to create a new account as well. So this will direct you to the chart of accounts page. So you can create another current liability account called corporate tax liability, and you can have it saved here. So that account will be chosen. So all the corporate tax liability will be saved over there. And then comes the retained earnings. So basically, the period's profit and loss will be taken forward to a specific retained earnings equity type of account. So that account can be chosen over here. So once the corporate tax is being generated and once it is filed, the entry that is going to be credited and debited will be between these two, liability and the retained earnings account. So that retained earnings account will be an equity type of account, and that also you can have it added here. Okay, and then comes the different sections of the corporate tax returns in which you will have to basically define the chart of accounts here. So to do that, either you can select the accounts that have already been created, or if you wish to create a new account, you can head to the accountant module, go to the chart of accounts, and here, for example, let me create a new expense account called as penalties. So I create a new expense account, and here I will type it as penalties. And I have it saved here. So now when I go to the same page right over here, you can very well see it will come under the drop down penalties. I will have it chosen here. So basically, what are add back expenses? So any expense that you do in favor of, maybe you might have paid penalties, fines. So anything that you do in those sort of categories, that can be defined here as the chart of accounts. And once you record those transactions in your books of accounts, the application will automatically capture those information and it will be populated in the corresponding section of the corporate tax return. Okay, and then comes the income accounts to be deducted. So there would be certain incomes that are exempted from tax, right? So those type of incomes can be entered over here. So Guru made a very valid point of the dividends or the foreign double taxation, right? So in order to avoid those double taxation, so it might be dividends or it might be the profit sharing based on the ownership interest, and then there might be international transport exemption. So any income that is exempted from the tax, so those income can be entered over. Those incomes chart of accounts can be defined over here. So in my example, I have taken it as dividends. So this will be the third section of the corporate tax returns, and then will be the entertainment expenditure accounts. So obviously you will have certain entertainment expenditure. So those entertainment expenses can be recorded over here. But please note that only 50% of that value will be taken for the corporate tax liability. So here I have taken meals and entertainment, maybe it can be food expenses. So anything that you wish to track it under this section, the corresponding chart of accounts can be selected over here. And then comes the net interest expenditure. So I would like to explain this in detail than the other sections, because net interest expenditure is the algebraic sum of multiple components. So when I say multiple components, so the net interest that you receive as an income minus the net interest that you pay as an expense. Like you might have bought a loan. And so you will be paying some monthly installments, right? So the interest is an expense for you. So the net interest expense that you incur from that will be deducted from this. And similarly, you might have done some savings, so you would get some interest income, so that will be added. So the interest income minus the interest expense plus or minus the amount that has been carried forward from the previous return. Okay, so that will be calculated. So as you know, for the first VAT returns, for the first corporate tax return, so there would not be any previous returns carry forward. So that will be considered as zero for the very first period that you're going to file it. So the net interest income minus the net interest expense plus or minus the amount carry forwarded from the previous return altogether will sum up to give you the net interest expenditure. And please note that if the NIE, which is the net interest expenditure, after calculating everything, if it is positive, then the whole amount will be taken as payable. In case the amount comes as negative, then 30% will be calculated from the profit and loss, and that will be posted as the net interest expenditure. So based on this, the corresponding ledgers can be incorporated, and once you click on save, the corporate tax settings would be updated. Okay, so now we have configured the corporate tax details with their accounts. Now we can pass few entries. So as I told you, right, it is a transaction based application. So based on the invoices, expenses, the journals, everything that you post, through that the application will capture those information and it will post it in the corporate tax return. For example, let's say I have paid a penalty. So I go to my expenses module. Here I choose the ledger penalties. Let's say I have paid penalty of, let's say, 5,000. So I simply save this expense. Similarly, I am going to post another expense, maybe like meals and entertainment. So like that. So just to show you how the 50% of the amount that we have captured is going to be populated over there. So I'm going to choose the meals and entertainment ledger that I chose over there. So I'll put it as maybe 10,000. I save it. So these are just examples to show you how the transactions are captured. And now we are going to see how the corporate tax return is being generated within Zoho Books. So now there is, as you can see, so in the left pane of your dashboard homepage, you see the corporate tax tab, under which you see the corporate tax return. So here in the tax returns, once you see here, so at the top right, you would have an option called as generate return. So once I click on it, automatically my corporate tax return for that corresponding tax period would be populated. A corporate tax return generated successfully. So now you can see Jan 2023 to December 2023. So when I click on it, you can see the sections. So the sections that we spoke over there is being captured over here. I will just explain to you. So the net profit and loss for that specific period, and then the add back expenses. We have mentioned fines and penalties. So I have recorded that. So those things have been captured over here. So if you can just select this furthermore in order to see the drill down or the split up of the transactions that you have recorded for that specific ledger. So it will take you to the account transactions report for that penalties account. for the slowness. So as I had shown you, so it is taking you to the account transactions report. Now coming back. So we see the deductions in which the dividend is being recorded, and then the entertainment expenditure where the meals and entertainment I had mentioned. So that is being captured over here. So the NIE, the net interest income or the expense, so that can be that is being captured here. And then finally the tax loss relief. So anything, so like how we saw 30% is calculated from the profit and loss for the negative. Similarly, so the anything that is being carry forwarded, so if it is whichever is lower, so the sum of all the 5 sections or the 75%, whichever is lower, that will be taken forward here. And based on this, your total income will be captured. So the first section plus the second section minus the third one, which is the deductions, plus 4, 5, 6 altogether will give you the total income. And as you know, for the first 375,000, it is exempted from the corporate tax. So it is basically valued at 0%. So we will be deducting that amount from this total income, and it gives you 479,996. So 9% of this will be calculated, and that is the final result that you get over here. Okay. And I would like to insist on a specific point here. Kindly note that FTA as of now, they have not given any specific format as such for the corporate tax return. So based on our handling only, this is being done. So this is moving further. If they are providing a specific set of format, so we would be handling that as well. Okay, so this is a format that we ourselves have are handling within the Zoho Books, and you can see the total corporate tax, which is 43,199.72. And whenever you make the corporate tax payment, so you can head to the tax payments where you can record the payment over here. So you can choose your pay through account. You can have it saved. So here, now I'm going to mark this file so that my corporate tax payment is going to be done over. So this is the corporate tax that I have done. Once the filing is done, so the transaction locking has to be done. So now my period is being locked. So now I can just go and I can mark this particular thing as filed. Since the corporate tax is filed, now if you go to the payments, you can see December 2023 payment, the corporate tax liability that you saw there, that is coming over here. And whenever you make the payment, you can just simply click on record payment as I had earlier shown you. So once I click on save, the corporate tax liability would be debited and my cash or bank account through which I have paid, that would be credited. Okay, so this is how Zoho Books has equipped itself in order to manage your corporate tax returns and their payments. Okay, so just to give you a quick recap of what we have seen in the presentation, we saw how the corporate tax settings were configured. We saw how a corporate tax transactions are recorded, normal transactions are recorded, and how it is being captured in the corporate tax returns. And once the return is being filed, we also saw how the corporate tax payment is being recorded. Okay, so I think that is.
I have some questions, Madhu. Can you highlight those aspects? How Zoho Books can help uh, businesses in this? How you can attach a document to a transaction, etc. Can you throw some light on that? Because it is a 7
Sure.
years mandatory requirement. So, for example, if I receive a vendor bill or an expense I made, I wanted to scan the image and store it. Will Zoho Books support this?
Yes, it does. So we do have a document section. So we have both auto scanning as well as you can just simply attach the files to a corresponding transaction. For example,
Show it in
if
the
I
Zoho
choose,
Book screen.
sure, I'll just share my screen. Screen sharing laga problem. I believe my screen is visible now.
Yes.
Yeah, thank you. Thanks for the confirmation, Guru. So here you see we have the list of invoices. So if I want to attach any files or any documents related to this particular invoice, I can very well see there is an option called as attach file. And please note that for each of the invoices that you create, you can upload a maximum of 10 files with 5 MB each. So either it can be uploaded from your local system. Otherwise, we have a document section from where, so at the bottom, you can see there is a document section. So from here, you will be able to see the list of all the documents that you have uploaded. And we also have auto scanning of documents where you can just scan it. So we support OCR scanning. So that scans and it comes here into Zoho Books as a document. And that can be attached or added to any of the modules that you wish to do.
Is it only for invoices or purchase bills also this is supported?
This is for invoices, bills, expenses. For all the main modules, we have given that provision. So for example,
customer master, vendor master, you can attach the trade license and keep it with them.
Absolutely, yes, you can do that. However, please note that the limit for the number of files and the size of the file differs from the module to module. For example, in the invoice we saw 10 files with 5 MB each. Maybe for the purchases, for example, I choose a bill. And here if I see, you can very well see it is upload a maximum of 5 files with 5 MB each. So you can cross verify it one time before you upload a specific document to a specific transaction.
Okay. Another question from a common man perspective is there is a expectation that the salaries and wages register must be maintained in Zoho. So does Zoho offer any solution for that?
Generally speaking, within the scope of Zoho Books, we do have a dedicated expense module where you can record the expenses under the salary and employee wages. In case they are looking specifically for payroll, yes, for the UAE edition, we have a dedicated payroll feature, that is payroll application that has been introduced. So they can very well use. So the accounting entries of the payroll will be pushed into Zoho Books.
So all the pay slips and WPS will be covered in Zoho payroll, but they need to subscribe separately for that, correct?
That's correct. Okay. So it is a separate application. The integration can be established for which there is no additional cost, but the subscription of the respective product has to be separately bought.
Get it. Fine. I think that brings us to the end of the product part presentation. Thank you for one and all for taking out your time and attending this session. In case if you feel that this session was beneficial to you, you may post us about in social media. I think our handles are Zoho Books, which is available in all the major social media platforms. Please comment or leave a word in our social media, which will help other business owners to know more about Zoho Books on this. This is the request I have. I think with that request, we can conclude the session. I once again thank one and all for taking out your time. And inshallah, I hope to meet you again in another occasion of similar nature and continue using Zoho Books. We will also continue to provide support for any statutory or tax related aspects in Zoho Books. And with that note, thank you and bye and masalama.
Thank you, everyone. Thanks for joining. Have a great day. Bye-bye.